Yeah, good morning, everyone. US market was more of a flattish, whereas Asian market are positive. Yesterday, ECB cut interest rate again, uh, driven by lower inflation, which came in at 1.8% earlier, below their target of 2%. As such, they reduced the interest rate by another 0.25%, and that was third in a row. Uh, Apart from that, Asian markets are indicating a positive trend, whereas Indian market is consistently underperforming, mainly driven by the corporate results. So yesterday, if we see various company has come up with results which were below expectation, except IT, other sectors are underperforming or are giving lower results. Axis Bank has shown advanced growth of just 11%. Like Havells has seen margin pressure, Polycab has also seen margin pressure, Nestle lower growth and margin pressure. So a lot of corporates are giving below expected number, and that is influencing the market in India. So this was what we had expected at the start of the month, whereas start of the month, and that is playing out. But what we see that though this is a temporary phase with Q2 result, the things should come back in Q3. So this any good corrections in the current momentum is a buying opportunity for a bit longer term perspective. Uh, and I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. See, yesterday we mentioned that Nifty failed to sustain the 50 DMA and trading below that last 1 week. And we expect some pressure in upper end. And yesterday we saw some pressure in upside. This selling pressure to be continue towards 24 640 600 600 24,600 is a major support for index. If Nifty break and close weekly close below this range, then we expect further sell off towards 24,500 and 400 at downside. Upside 24,870 and then 25,050, that is 50 DMA is immediate resistance for Nifty. Today we expect gap down open and witness to some selling pressure during the day. If Nifty break 40 24 600, then we expect this selling pressure to be increased towards 400 and 500 at downside. Bank Nifty also trading below the important support zone, and next majorly support place around 51,250, and below that this pressure to be increased towards 51,000 and 50,770 at downside. Upside first immediate resistance around 51,750. So both index trading below the important support zone. So we expect some pressure in both index. Fin Nifty also trading below the important range. That range comes around 23,680 and 23,440, and trading between this range. If Fin Nifty also break 23,440, then we expect further sell off towards 23 to 270, 280 at downside. Upside 23, 680 and then 23, 840, 30 is the next immediate resistance for Nifty. Stock specific. Negative side, we expect pressure in HUL, ITC, in both FMCG stock. We expect some pressure both in momentum indicator and direction indicators showing the weakness in this counter. So we expect the pressure in FMCG counter, that is HUL and ITC. And in power sector, Tata Power looks weak at current level. We already given call in yesterday this stock. We expect this pressure to be continued towards 50 DMA at downside, 440 and 438 at downside. Positive side, LNT looks positive at current level. Last few trading session, LNT trading near the 200 DMA. But if weekly close maintain above this 200 DMA, that comes around 3580. If L&T manage to sustain this range 3580, then we expect further up move towards 3670, 3800 in upside. Downside majorly support place around 3520, 35,000, 3500 at downside. That is for technical derivative guy can.
Thank you, Vikas. On the derivative front, yes, we have seen a good amount of selling pressure. There are a couple of things that have become negative. Firstly, 25,000 level is broken. That held the highest put base, and now that has shifted lower towards 24,000 odd levels. Highest call base now around 25,000, so that is also negative. VIX has increased slightly, but most importantly, the cost of carry is increased from sub 50 odd levels up toward 93, 94 levels. That does suggest there is selling in the cash segment and not the future segment, which doesn't hold very well. So yeah, these are the negative signs. However, 24,700 is the previous low for Nifty from where it had bounced. And on a closing basis, if we save that, we can see some bounce coming in up to the 25,000 levels. A bigger rally will take shape only about 25,000 levels, and when the data become more positive, at this point of time, it is slightly negative. So we expect the selling spree to continue. Once 24,700 is broken, the next real support area is around 24,500 to 24,200 odd levels. From the stock specific front, selling was seen everywhere. Only IT saved the day yesterday. I believe some sort of buying can come in other stocks like TCS, Tech Mahindra, and the smaller stocks in the IT space. Also, the pharma sector can witness some buying. This is one sector which has broken out, and a lot of buying has gone in pharma in the last 6 8 months. And we believe these longs continue to be built in some stocks like Divi's, Sun Pharma, Oro Pharma, and the others. So they can continue to perform going ahead. Yeah. So look out for the same. That's it from my side. Like to ask the fundamental team to take over, please.
Good morning. On the result on the result front from the consumer side, Nestle India Limited posted the results below expectations. Revenue grew by 1.3% on a YY basis, so this is more or less flat. And EBITDA margin reported at 22.9% versus the expectation of 24.1%. In the press release, the management highlighted that 65% of its top 12 brands has seen the positive volume growth. That also suggests that the rest of the portfolio are still having the weak market sentiments, reporting negative volume growth. While Nestle has performed well in the last few years when compared with the peers, last few quarters has seen the challenges in terms of the volume and the sales, both. This is again by the weak consumer sentiments. Also, it has mainly observed the weak performance in the prepared dishes, cooking aid, and milk nutrition segments. However, companies and investment in the expansion over the last 5 years and the new product innovation in emerging markets is expected to drive the growth in the long term. The stock is currently trading at expensive valuation of 60 times to FY26 EPS. That provides a low opportunity for returns over the next 12 months. One can hold or accumulate the stock on dips for the long-term perspective. Havells India Limited posted the results below expectations. Revenue grew by 16% on a YY basis, and EBITDA margin reported at 8.3% versus the expectation of 10.7%. Overall, B2C value growth stood at 20% on a YY basis, and B2B growth stood at 9% on account of industrial slowdown. The stock is trading at a PE of 57 times to FY26 EPS, which seems to be fairly valued. One can expect better performance in the second half on account of good traction from the festive season, where we can see the pickup in demand for the domestic appliances. One can expect the limited upside in the near term and can accumulate with the long-term perspective. Polycab India Limited posted the results below expectations on the margins front. On the top line front, it has delivered the performance ahead of market expectations with 30% revenue growth. But on the margin front, gross margin reported weak at 23.6% versus 28.1% in the last year same quarter. Operating margins also reported at 11.5%. We will provide further update post today's con call, where the stock is currently trading at a PE of 44 times to FY26 EPS. On the chemical side, Tata Chemicals Limited posted the results below expectations. So the subsidiary Rallis India had posted the results ahead of expectations. Excluding that, the Tata Chemicals performance was weak. Revenue was flat, and the EBITDA margin reported at 15.5% versus the expectation of 14.9%. On the industry front, the soda ash is still facing the problems. Overall, there is a weak demand and the pricing environment, which is likely to have impact on the future performance. Thus, we have a negative outlook on the stock. Thank you.
Good morning. Some more results. Infosys delivered the Q2 results in line with expectations. Both the revenue and EBIT margins met the analyst expectations. In the con call, the management noted that despite economic uncertainties, there is demand for cost optimization and digital transformation services projects. The focus now remains towards small deal wins for faster revenue translation, and this has also led to a weak TCV of US dollar 2.4 billion in Q2. While certain sectors like BFSI have shown increase in the discretionary spending, especially in the capital markets, mortgages and payments and cards, but retail, automotive continue to experience softness. Company has revised the revenue guidance in constant currency up first to 3.75 to 4.5% for FY25. This is mainly backed by better Q2, good pipeline in the financial sector, and overall volume uptick seen by the company. Q3 is expected to face some normal furloughs, which could impact short-term growth, and hence the company has indicated cautious optimism for the second half of FY25. Stock is available at a PE of 27 times FY26 earnings. In near term, the stock can be under pressure. Long-term outlook continues to be positive. On the similar lines, LTM Mindtree also reported numbers in line with expectation, both on revenues and EBIT margins. TCV came in flat at $1.3 billion. Last quarter, it was 1.4 billion. Company is giving wage hikes in Q3, which would impact the EBIT margins by almost 2%, but it is confident of offsetting them partially with operational efficiencies. In terms of furloughs for Q3, both Infosys and LTM management find themselves in a better position than a year ago. LTM stock is available at 33 times FY26 expected earnings. Again, in near term, it might face hindrances, but one can add for a long-term positive outlook. Thirdly, Wipro came out with its numbers and they were ahead of expectations. Revenues came marginally ahead of its guidance given in Q1. The company gives a quarterly guidance every quarter. So the growth was of 1.3% quarter on quarter in reported terms and 0.6% in constant currency terms. Its consultancy business, that is Capco, grew 3.2% on a quarter-on-quarter basis. The EBIT margins for Wipro continued to grow and came in at 16.8%. This is despite a one month wage hike it had given. So the margins grew on the back of higher gross margins and overall better operational efficiencies. Company has indicated a good deal pipeline across broad-based, which will be across verticals. Earlier in Q1, most of the companies have given a positive commentary about the BFSI sector. However, this time everyone are talking about broad-based pipeline. So that's positive for the whole sector. Coming back to Wipro, US market is doing good for the company. The Asia Pacific and Middle East is showing signs of recovery. However, Europe market is under stress for the company. It is facing some client-specific headwinds in its energy, manufacturing, and utility vertical, and thus company has shied away from giving any kind of timeline for revenue growth recovery. But overall, it expects stable growth momentum once it starts winning more deals in the energy vertical. The company has given Q3 guidance, which would be -2% to 0% due to furloughs and client-specific problems in energy vertical in Europe. However, it is working on a five-fold strategy to revive the growth momentum. Primary one being mining existing clients and acquiring large deals, which has also reflected in a large deal TCV of 1.5 billion for the company in this quarter, which is a 17% growth Y on Y. Wipro has announced a bonus in proportion of 1:1, which would be subject to shareholders' approval. Stock is available at 21 times FY26 earnings and looks attractive with a risk reward ratio being favorable. That's it from me. Thank you.
Good morning. C8 Limited result is marginally below expectations. Revenue from operations grew by 3.5% quarter on quarter and 8.2% YOY, but EBITDA declined by 5.4% quarter on quarter and 20.6% YOY. EBITDA margin came at 11% versus expectations of 11.4%. PAT is also below expectations. Thank you.
Good morning. Axis Bank reported its results yesterday. The results are in line with expectations. Credit cost came at 0.9% versus year-on-year 0.4%. Slippages came at 1.8% versus quarter-on-quarter 2%. GNPA came at 1.4% versus quarter-on-quarter 1.5%. The NNP came flat at 0.34% and PCR remains at 77%. Advances grew 2% quarter on quarter and 11% year on year. Deposits grew by 14% year on year and 2.3% quarter on quarter. The CD ratio remains flat at 92. NIM declined to 3.9%. 3.9%. ROA grew to 1.84% and ROE at 16.8% quarter on quarter. NII grew by 9% year on year. The Axis Bank exhibited the first of its kind UPI ATM for cardless cash withdrawals and deposits to access to various banking products like saving accounts, loans, and fixed deposits. The bank intends to grow at 300 to 400 BPS above the industry. Overall subdued quarter, although management has stuck with its advances guidance of growing 300 bips above industry, which we believe will be a tough task to execute considering tepid growth in H1. So the outlook remains neutral. Thank you.
Yeah, that's all from us. Now I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. Prices have already opened a gap up in gold and silver. Still, one can initiate a buy in gold around 77,350 with a stop loss of 77,100. On upside, again, prices are expected to touch 77,800, 78,000 on the upside. Silver also, if prices are sustaining above 90 to 800, then further buying can be expected. Else, one should wait for a dip around 90 to 350, 90 to 300 with a stop loss of 91 500. On upside again, it can test 93 500, 94,000. In crude oil also, some pullback is expected till 6,020, 6,050. So buying with a strict stop loss of 58.70 is recommended. In natural gas also, prices are expected to consolidate from 193 to 208. So for pullback, one can initiate a buy with a strict stop loss of 190. And in metals, copper looks positive. Prices are expected to test 824, 826 on the upside. So buying around 817, 816 is recommended with a stop loss of 812. Zinc also one can buy around 181, 281, and maintain a stop loss of 279. On upside, expected to test 284, 285 levels. That's it from us. Thank you very much.